type of loan programs are out there?
There is a loan program for just about anyone and everybody depending on their situation. But let's just take a look at some categories, the most common categories. There are conventional mortgages. These loan programs are typically going to be for people who have very good credit and money for down payment. A first-time home buyer can put down as little as 3%. Non-first-time home buyers do need at least 5% to put down on a conventional loan. If it is a conventional buyer that's looking to buy a second home or an investment property, they're going to need a larger down payment. While a second home minimum requirement is 10%, what we find is that it really takes a 20% down payment in order for the numbers to work out from a compliance standpoint. And on investment properties, what we also find is that while 20% is the minimum required down payment, it's typically better for the investor if they're able to put down 30%. Outside of conventional loans, we come to government-insured loan programs. And there are 3 types of government-insured programs: FHA, VA, and USDA. Each of these programs have their own restrictions. An FHA loan, for example, has maximum loan amounts. You can't buy an $800,000 home on an FHA loan unless you're putting down almost $400,000. A VA loan requires that you have had served the U.S. military and are eligible for veterans benefits. A USDA loan program is reserved for folks who are buying in a rural area. The property needs to be geographically designated as a rural area, and this is verified on the USDA's website. There are also income restrictions on a USDA loan. Outside of conventional and government-insured loan programs, we also have non-QM. Non-QM means a non-qualified mortgage. These are loan programs that do not fit the mold of traditional secondary guidelines. Fannie Mae and Freddie Mac set the secondary market guidelines for conventional loans. Ginnie Mae and VA set the secondary market guidelines for FHA, VA, and USDA loans. Non-QM loans are determined by a private market. Private investors determine what type of risk they're willing to take on those. The non-QM loan programs would include things like bank statement loans for self-employed borrowers. Will also include loan programs for people who might have a recent bankruptcy. Maybe they're just slightly missing a credit requirement on a conventional or a government-insured program. They may also be able to do a loan without any tax returns, provided that they are buying an investment property and that they are using the market rent to cover the mortgage payment. Within conventional loans, there are also construction loans, renovation loans that can help people repair properties to make them eligible for primary residence. For an investment property that requires construction and repair, that's going to require a private loan, such as a fix and flip loan. Not all lenders do all loan programs, and not all loan officers specialize in everything. So it's important that if you have a very special and specific need, if you're not finding that need met by one lender, don't give up. Talk to someone else. I'm in Raleigh, North Carolina, and if you need someone to talk to, I'll be happy to talk to you to help you find the best lender for you, even if my company can't help you.